there is serious improvement.
Like I
Just
say,
that Kai, I've not been able to like practice it on a live account, but on a demo account there is serious improvement.
it's a gradual process. Every one of you guys will get there. You know,
Yeah, man, sir.
one thing is,
Yes, sir.
you need to. I was discussing with one guy today. One of my friends brought him to me this evening. So he said he wanted to learn forex. So I was telling him the it's not that easy, but it's actually easy if you put the time and if you put in the work. He told me something that I was impressed with, which is he's very hungry. Like his hunger knows no bound when he's trying to learn something. That no matter how difficult it is, he's going to put all the effort he can. He's not here to make quick money, but he just wants to learn it. So at least that's a good mindset to start with. Now, when you put in that effort every day you're pushing yourself, you are becoming better with every day that pass. So surely you will not notice it currently, or you not notice it very soon, but as time goes on, when everything's are now falling in place, you know that everything you are gathering today, let's assume the other block, other block, breaker block, FVG. By the time everything has fallen in place, all the pieces have been put together, that is when you appreciate every moment you spent on chart. Why? Because the time you spend on chat is a lesson on its own. I don't even know how to explain that. I've tried several times to explain that to people, but I can't actually do justice to that explanation. The best teacher I've ever had is the price action itself, not even the people whose course I went through. No. My best teacher is looking at the price, doing the things I learned. Now, watching the price alone makes me to know a lot of, and like made me to realize how most of this setup form. Initially, when I normally pick fair value gap, once price has touched a fair value gap, I'll enter the trade. It took me a series of lost trades before I realized that sometimes um, market can go deep inside a fair value gap, and sometimes it can go deep into an order block and so on. So it will take you a lot of practice and chart time to be able to know how your setup form. All you just need to do is to have a model, try and be practicing that model continuously, and you will find out very soon that every time you spent on chart has never been a waste. It hasn't. Knowing the concept is one thing, honestly, but that chat time is everything. That chat time is everything because when I was learning how to pick turtle soup, I thought once a price has gone through a high or through a low, that is the turtle soup. It took me a series of lost trades before I realized that okay, there is logic behind it. So a lot of you guys are pattern traders. A lot of you guys in that my free group, you are pattern traders. You don't apply logic to your trading. And the truth is, most of you guys are good in your analysis. The only thing is, you are not applying logic to it. You are really looking for pattern. And looking for pattern is not enough. You need to know the you need to have logics behind every pattern. If you don't know the logic behind every pattern, then definitely you will still lose trades. So I think with this number we can start. Like we always do, we are going to start with the dollar index. And the reason why we do this dollar index is a kind of a barometer, like a kind of we use it to know what the other currencies are going to do. For instance, currency like in US dollar, um, in pound dollar, they are inversely correlated to dollar itself. So if dollar is being bullish, Euro USD and GBP USD will be bearish. In fact, most XXS USD pair will be bearish. Then when dollar is bearish, most XXS USD pairs will be bullish. Then every other USD XXS pair will be moving same way as dollar. So that's why when we are doing our analysis, we want to start looking for what the dollar is going to do. Now, mind you, when you want to start your analysis, always look, that is at the beginning of the week, always look at the weekly time frame first. Now, once you set out a draw on liquidity on the weekly time frame, you don't have business with the weekly time frame again till the end of that week. I will show you an example, but before I show you an example, let me just explain. You look at the weekly time frame first, to know where the weekly, that is where the week is likely going to expand to. Now, once you've seen where the week is likely going to expand to, all you just need to do is to be looking for daily time frame level or 4 hours time frame level to trade for your setup to occur inside that level, so that you can trade towards that draw on liquidity every single day until that draw on liquidity is met. So now let me share my screen. We're going to start with the dollar. Now this is the dollar, this is the, okay, let me go to the weekly time frame. Now you can see last week this was the candle that was printed last week. Now I now told you guys that this is our draw on liquidity. Can you guys see my screen?
Yes, sir.
Okay. So I told you guys that this is the draw on liquidity on the weekly. So we are not saying the draw on liquidity will be met during the week. We just say that is our draw on liquidity. We want to be trading towards that draw on liquidity until this draw on liquidity is met. We are not changing our BS. Right? Now we are still expecting this week to also expand to this point, this draw on liquidity here, which means we'll be looking for daily level to get to this draw on liquidity. Now it's very possible that we might see this level met on Monday or on Tuesday. Now if this is done, what we have next is this fair value gap here. We have this FVG around here, so which means if we meet that target before Wednesday, or we met it Wednesday or Thursday, we might see a weekly reversal on dollar. What's wrong with this one? Let me just do it like that. We might see a weekly reversal on dollar, and maybe in 2 or 3 weeks dollar will be bearish to rebalance this imbalance. But for now, we are looking at this draw on liquidity in dollar, and this is our long-term perspective. This is the long-term perspective on dollar. Now, since we are bullish on the weekly time frame, we just want to go to the daily time frame and look for reasons to be bullish on the daily time frame. Now we have this order block. Let me do it the same way you guys are doing it. You guys normally mark the full body. That's what you guys do, and this is the consequent encroachment of the order block. This is 50% of the order block. But what I normally do is I use I want to see the open, and this is the open of the order block. right? This is the order block itself. Now we have if an FVG inside that other block. So this could be a potential place. This is the environment where I'm looking for my setup to occur. This environment, that's where I'm looking for my setup to occur to start buying to this point. Now if you go to the 1 hour, you'll see that we have this equal low here, relative equal low here. Like I told you, like I taught you in the mentorship, liquidity grab. When you pair the daily with the 1 hour, now FVG, the daily level will give you a kind of liquidity on a lower time frame. Now this is where we have it. We have something like this. We're expecting the market to trade into this point and start buying. And I would like the market to mitigate this high. Then and start buying. It may go deep, but I don't want to see the market going deeper. I don't even want to see the market to get this point on the daily. At least this high or the body is enough. Once price goes below the body, then this setup is a kind of failed setup to me. But this is where I want to see the liquidity grab and the market to start to activate the weekly drawn liquidity. So if the market continue moving higher here, then we don't have a setup. But I want the market to come down. Why? Because we have this already. We have this range. Remember what I taught you guys about range high. This is the range high. This particular point is the range high, and this is the range low. Now the range high has been purged, right? The range high has been purged. Now we're expecting the range low to be purged. Once the range low is purged, we'll be looking for a setup to go bullish. Now you realize that what you only need is the high time frame level and lower time frame liquidity grab. So that's for the dollar. Now let's look at euro. Now if you look at euro, let's go back to the daily weekly time frame. Now on the weekly time frame, we have this drawn liquidity on euro, and this drawn liquidity has been targeted. The next drawn liquidity we have is this particular low here. This particular low, and relating it to dollar, you see that this low is very far. You see that this particular low is very far. But however, this is the draw on liquidity on euro. But to me, I think GU is the better trade. GU will be more weaker than EU, because currently Euro GBP is bullish. Euro GBP, you can see Euro GBP is bullish on the weekly time frame, bullish on the daily time frame. You see, since Euro GBP is bullish and dollar is also bullish, GU will be more bearish than EU. And of course, that's why you see during the week, GU has more strength, is more weaker than EU. And the previous week, the week that ended, GU was the most bearish, had the most bearish price action than EU. And this is the reason why. That is what I was teaching you there at that time. Relative strength analysis. If dollar is bullish, Euro GBP is bullish, then and Euro USD and GBP USD are both bearish, GBP USD will be more bearish than Euro USD because of Euro GBP is going higher. Now in the case where dollar is going higher and Euro GBP is going lower, Euro USD will be more bearish than GU if both price action are bearish. I don't know if you guys are getting me. If Euro USD and GBP USD are bearish, Euro GBP is also bearish. What's wrong with this thing? Are you guys still seeing my screen?
Yes, sir. Yes, sir.
Yes, sir.
Now, if dollar is bullish, Euro USD and GBP USD should be bearish, right? Now, if Euro USD and GBP USD are bearish, definitely dollar has been bullish. Now, if you have these two scenario, look at the Euro GBP. Now, what Euro GBP is doing will tell you which pair between Euro USD and GBP USD you should trade. Now, if you notice consolidation on Euro GBP, then both Euro USD and GBP USD will be very bearish, will be very powerful going down. But if Euro USD is trending, sorry, if Euro GBP is trending, just like we are having here now, Euro GBP is trending upward, dollar is also trending upward, but Euro USD is bearish, GBP USD is also bearish. The fact that Euro GBP is bearish will make GBP USD to be more, the fact that Euro GBP is bullish will make GBP USD more bearish than Euro USD. And you can see from this chart, you can see that this is Friday, this is Thursday, this is Wednesday, this is Tuesday, this is Monday. Now, the sell price action was activated with FOMC on Wednesday. And you can see Wednesday sell on GU, Thursday sell on GU, and Friday sell on GU. Now let's compare it with Euro USD. This is Wednesday, Thursday, Friday. You can see that Euro and GBP USD is more weaker than GU. The translation to that is that Euro GBP is bullish while dollar was also bullish. So because of that, GU will be weaker to the downside than Euro USD. I hope that explanation is clear.
Yes, sir. Yes.
So now for the drawn liquidity on the weekly, this is our drawn liquidity on Euro USD. Now, but like I said, Euro GBP is bullish. The fact that Euro GBP is bullish, the better trade will be GBP USD. The only way Euro USD will be bearish this week is if, let's go to Euro GBP. You can see Euro GBP now, this is the drawn liquidity, this high, this particular high here. That's the high, that's the drawn liquidity on that high. And we also have this level here. We also have this FVG level here. So these are the points where our drawn liquidity is on Euro GBP. So we might see this to be a turtle soup, a kind of liquidity grab. Might see something like this on Euro GBP, and the market will start coming down from here. So if we get something like this on Euro GBP, then Euro USD will be very weak. If we get something like this on Euro GBP, definitely Euro USD will be weaker to the downside than GBP USD if we get something like this. But if this week continue going bullish on Euro GBP, definitely GU will be the better trade. So we won't know until the week starts. But I'm having a feeling that we are going to get something, a kind of liquidity grab around here. We're going to get a kind of liquidity grab. We have this volume imbalance here. You can see it. This volume imbalance around here. So we might get a kind of liquidity grab down here, and the market will try to rebalance all this imbalance here. So let's look at it on the daily. It's obviously looking like we are going to get a liquidity grab here, and the market will be bearish. And if Euro GBP is bearish, definitely Euro USD will also be bearish. So that's that for Euro GBP. Now let's look at Euro USD. Now Euro USD, one target has been met, which is this particular one. The next draw will be this low here. So what I'm expecting on this is the market to, since we're expecting dollar to be bearish, sorry, bullish, and we're expecting that liquidity to be the grab on dollar, just need to look for a same situation on Euro USD. Now the only level I'm seeing on Euro USD, is this draw on liquidity. For now, at this point, I don't have anything I can rely on Euro USD. I don't have anything I can rely on Euro USD on this time frame. Rather, one or two things can happen on Euro USD. It's either this market starts going down because of there is no reversal after consolidation. There is no reversal after consolidation, and there is no retracement after consolidation. After consolidation, we want to see an expansion before a reversal, which means this is what we are seeing currently. We have this equal high here. On the daily, we are not getting any level at all, but on the 4 hours, we have this equal high. And we have this particular low here. And if you guys remember what I taught you about ranges, on one side of the range is purge, we're expecting the next side of the range to be purge. However, they can come down here, purge this low again before they go through this high, or they can just purge this high and start coming down. But to me, seriously, I don't like the price action of Euro USD. So let's look at GU. Now GU now is even nicer. Now this is our daily time frame. We have this level here, this FVG. We have this volume imbalance. This volume imbalance with the high of that FVG, and we have this other block. We have another FVG around here, and we have this other block. So you see, these are the levels we can be looking for a potential setup, which that's why I say if Euro GBP has a liquidity grab and it started going down, then Euro USD will be more bearish than GU. Then GU will now be using the opportunity to balance all these imbalances around here. But looking at GU, since GU left this FVG here at this low, this is what I'm expecting on GU. GU to come to this FVG, mitigate it, and start going downward to the next closest drawn liquidity again.
Sammy, I know they see your screen.
Is that so for everybody?
No.
If you can't see my screen, then
No, sir, I see your screen, sir.
it's from your end. If you can't see my screen, it's from your end. So try and log in again. So when I'm looking at drawn liquidity, I'm always trying to look for the closest drawn liquidity, the closest one, because it gives me a kind of confidence in my trading, not to be overholding trades. Now this is the closest drawn liquidity, this fair value gap here on the weekly time frame. Now this is the daily. Now this one is very close to me. Yeah, I really like this one. So I'd like to see a kind of retracement into this and this FVG on the daily, and I want to see a liquidity grab on the 1 hour. Now, yeah, we have all this low resistance liquidity run here. So I'd like to see the market going through all this high, because it's a kind of range pattern, right? You can see the range here, range low, and range high, right? Market can generate interest at both sides of this is the range high, this is the range low. So the market may come grab liquidity on the low again, go back to the high, grab the liquidity at that high, and start selling off. That is what I want to see in GU. So that's for GU. Now let's look at gold. Now gold, this gold, I'm very, very skeptical about gold. I said it last week that I believe gold is a bullish market. And you can see gold last week was kind of indecisive. It was bullish, it also was bearish. Before this week here, it was a body, right? Then it came back and closed here. So you see, the week was bullish and also give us a bearish price action too. Like I told you guys, I really believe gold is in a bullish trend for now. However, since dollar is bullish, we expect gold to also be bearish. But the price action is very obvious that gold is bullish to me. So that is why I've been very skeptical trading gold. The reason why I'm very skeptical trading gold is the fact that dollar is bullish. So since dollar is bullish, I don't want to be trading any Euro USD or any inversely correlated pair to dollar the same way as dollar. I want to be trading it in opposite direction, but gold is actually showing me bullish price action. I'm looking that gold is trying to target these highs and this other high here, this high here. So that's what I'm expecting gold to do. So now let's just do our analysis. Now you can see this low sell liquidity has been grabbed. Now we have the price trading above this particular green candle, this last green candle, which automatically make this last green candle an order block. Made the last green candle an order block, and you can see they traded to the 50% of that order block, the consequent encroachment of the other block. And as long as they are doing that, this will not be our drawn liquidity. This particular high here will be our drawn liquidity on gold. Now when I taught you market maker model, when you are pairing the weekly, you are pairing it with the 4-hour. I want to see a kind of market maker model on that 4-hour. And you can see we have this level 1, this level, this level, and the stop hunt. Right, so now this is giving me kind of confidence that this market is going to this high. I have a kind of strong conviction that gold is going for this high, even though we have a kind of market structure shift here. I don't trust this market structure shift. I believe that gold is going to that high. You can see we have this movement here. Gold broke this high, right, and has traded into this FVG. Now look how the gold is respecting that FVG. Now automatically gold has traded above this order block, the opening price of this other block, this green candle, which automatically turns it to an order block. So I'm expecting this price action to continue going bullish from this point here tomorrow, or to retrace back into this fair value gap, mitigate this other block maybe, and continue going up. So these are the two scenarios I want to see in price action tomorrow or this week. And gold should start going up from here, or to trade into this FVG and start going up. But I really believe gold is bullish, while other XSS USD are bearish. I believe that gold will be bullish, and this is where I'm hoping for gold to get to. So that's gold. What other pair should we look at? Indices. Let's look at NAS 100, the weekly. Now on the weekly, we have this low. We have indices targeting this low, which is our drawn liquidity. Another thing you guys should know is rejection block are also drawn liquidity. This rejection block here, they are also drawn liquidity. So don't be surprised that price will not even get to this low, and if it starts going up from here because of rejection block are kind of a draw on liquidity. Let's go to the daily time frame and see something. You can see on the daily time frame they've already grabbed this particular low here, right? So we might see a kind of retracement on NAS 100 into this FVG or this particular FVG, but I don't want this first FVG. I don't want this first FVG. They are going to retrace. I am expecting them to come to at least this particular one or even this other block. This FVG to me is not an option. I'm expecting them to break it, trade to this particular FVG, or even get to this other block that is here. So I'm expecting NAS 100 to be bullish also. And let's go to the 1 hour and see. Now on the 1 hour we can see it has gone above this particular high, which we can see as a market. I can see this as a market structure shift or market structure break. Then this low to be a liquidity grab. The market traded into this other block, this particular other block here, and you can see how market is respecting that other block. So I'm expecting the market to go bullish here and attack this high, this particular high here. So I think NAS 100 also should be also be a bullish price action, probably to this high also. So guys, that's it. If you have any pair you want me to look at, let me know. What pair do you want us to look at?
Help us look at USDCHF.
This price can consolidate, like, so on this one is directly correlated to the dollar. Okay, I'm coming. This is directly correlated to the dollar. Now this actually shows that this market is drawing to this particular place. Why? Because it's disrespecting bearish PDRA. You can see, look at this bearish PDRA. This FVG was disrespected, this volume imbalance was disrespected, this other block was disrespected, this volume imbalance also was disrespected. So it's clearly showing you that USDCHF is bullish and it's going for this high. I remember I did this analysis for you guys some times ago, where I say since this low has been grabbed on the monthly, we should be expecting a bullish price action on USDCHF. I did this in the free group. I did this. If you go back very well, you see this, and I showed you the market maker model on this price action. This level, this level, this level, and this particular high here. So this is a long-term trend. This is a long-term trend. I'm expecting USDCHF to come here. It may not even get there this year, maybe next year, but it's a long-term trend. Those who bought it from here, if they can swing it, they can get to that point. And if you get a good level to enter at the retracement, you can also still swing it to this high. Maybe before the end of next year, you're already a millionaire, if you have that patience to trade like that. So okay, for now, this is our drawn liquidity on the weekly. Then on the daily, how does price get to that point? We have this big FVG here on the daily, right? Now, since that's what we have on the daily, we want to see liquidity grab on the 1 hour around that area. Now you can see we have the classic range pattern, right? We have the classic range pattern. The market is ranging there. And what have you learned about ranges? When one side of the market is purged, you look to for the other side to also be purged. So I'm expecting the market to draw to this low here, buy, and target the other end of the range. So that's that for USD CHF. What other pair? USD CAD. If dollar is bullish, USD CAD should also be bullish. But USD CAD has been a stubborn pair for a very long time. While dollar was bullish, USD CAD was proving stubborn and was going bearish. Like I said the other day, I told you guys in the forecast class that this is a level where I want to see USD CAD react on, and you can see it gets to that. It actually violated that point with the wick, but the body closed inside that level. This is the reason why they say the wick does the damage, the body tells the story. All this one is a kind of stuff on to take people's order. The market was not supposed to do this, but because of their manipulation, they get it to this point. Although the market is programmed to do what it was programmed to do, the market is never wrong. Now, market has gotten to this FVG and has retraced. Now, where will the drawn liquidity be? The drawn liquidity will be this high. So if you go to your 4-hour, you will see a market maker buy model. If you go to your 4-hour, you see a market maker buy model, and you can see it here. We have this original consolidation, this level, and this swing low here. So market has taken out this high. We have a confirmed market structure shift here. Market retraced back to this other block, started buying. Now what can you notice here? You can notice that we have this low, swing low, as a liquidity grab, right? Now we have this market moving like this. Now what should you be expecting? Market has left an FVG around here on this other block. This is a very nice setup. This is the kind of setup I like seeing. So I'm expecting the next candle to come down to this other block, then buy, and our weekly drawn liquidity will be this high. So USD CAD will be a nice pair to buy around here and target this particular high. So I think USD has a very nice structure. I like this structure on USD CAD very well. I like it so much. So I think you can even see on the 1 hour, we are going to get a liquidity grab on the 1 hour. You see? So this is nice, something I need to see. Now you can see on the 4 hour, this is your target. This high here is your target on the 4 hour. Then on the 1 hour, this particular high here can be your target. So depending on the kind of trader you are. So if you're open like 2 or 3 positions, you want to see this, you want to take some target off here, and you want to take the remaining target off on this other block, on this swing high, sorry. So that's that. So what other pair do you want us to look at? And another thing again to even solidify that this is a nice area to buy is the fact that we have a breaker block around here. Now what is a breaker block? Some of you guys are getting the concept of breaker block wrongly. A breaker block is when we have something like this: low, high, lower low, and a market structure shift. So this is your breaker. This movement down that took liquidity is your breaker. Then when price return back to the last bullish candle that caused the breaker, that is your breaker block. This is your breaker block. So all this white candle here, they are your breaker block. So once price gets into it, you want to start buying inside that area. So that's what a breaker block is. Some of you are misinterpreting breaker block. Some will say, okay, some will call this a breaker. This last green and this last white candle here also. I don't know how you guys are calling it, but all this they are order block. Order block is different from breaker. So this is this for USD card, and USD card has a very beautiful pattern. I love the pattern. I love the pattern, so it's nice. See, it's worth looking at. Somebody mentioned Euro card. Anybody trading BTC here? No, BTC.
I think
Go today this class.
well, no,
Go today our class. With the red goat. Oh, now picking the cry. I beg me, I no verse so. I beg you, now picking the cry, I no verse for me. I don't know. So this is the low. I'm still looking at what's it called? BTC to go down first before going up. Although I don't trade BTC, but this 32,000, I think that's the target for BTC. Once this low, that's the long-term target. Once this low, the liquidity has been grabbed and this breaker block is mitigated. Once this breaker block is mitigated, I'm expecting the market to go to that high. So that's for BTC. Then, because this is the weekly time frame, so it's a kind of long-term trend on the downside. So we might see the market coming to this high to grab liquidity first. Coming to this high, grab liquidity before it starts selling to this low on the daily. So if the price is actually coming to this high first before going to that low, then how do we buy it to that high? How do we buy it to that high? We have this order block. This is the only thing I'm seeing currently, this breaker block and this order block. The price might get there, it might not, but this is the only reason I will look to buy this pair. Buy price coming back to this order block and giving us a setup to buy it to that point, then before going down again. That's on the daily time frame. So we might see something like this on the daily. Market coming down to this point, and then from there we'll see something like this high. And when price get to this high, it will start falling back again down to this low, and then from this low we see price going to this all the way to this particular high here, this particular high here. So that's that for BTC. And someone mentioned Eurocard. Eurocard, last week I told you guys that Eurocard should be bearish, that we want to target this particular low here, this particular low. But Eurocard spent the whole of last week consolidating somehow. Spent the whole of last week consolidating. I was expecting Eurocard to come to this FVG, but it never came back to that FVG. It just continue going down. Just continue going down. So for now, I don't know for Euro USD card, but all I know is we have this order block, this particular order block on Euro card. I don't like the price action currently, so I would demand for more information. But we have that order block. Now let's go to the 1 hour and see if we can get a nice structure. So we have this particular price action. So we might see a kind of market reacting at this particular order block if the market is going to sell. Now react at this particular order block and it will sell down to this point. But I believe the market is bearish on Eurocard I don't like the price action on EuroCAD. So far, the best price action I've seen is USD CAD, USD CAD and USD CHF. Those are the best price action I've seen so far. So I think that's it, guys. We spent 45 minutes on this class. So I think I've given enough forecast for the week. The thing that is left on your end is to apply risk management to your trading, because there is no holy grail in this market. Don't think because you have the market bias then you must be profitable. You can know the market bias and you will still not be profitable because you have shitty risk management. But if you have a good risk management and you have a good risk approach and you're not a greedy type of person, because currently the year is ending and the market will be moving in a very short cycle, not going to be giving that as much as it was given at August and June, July. No, you won't see those kind of price action. The market will be moving very slow. It will be giving pips actually, but you see a lot of heavy retracement and a lot of consolidation. So you need to be very careful and you need to be satisfied with enough. Once you've gotten enough, you get out of the market. For those people who want to lose their money to the market, anything you get, you should be satisfied with it. So actually this also is a range, it's a kind of range pattern. This is a kind of range pattern also. We have this low and we have this particular high here. Anyway, I will still trust the fact that this market may sell from this other block and not necessarily needing to go through this high because it has already broken this low. So the logic here is very important. It's not every time markets will go through a range after taking one side of the market. It has already taken this side of the market with the range. This is the range low and this is the range high. Took out the range high first, then broke. You see, like I told you, bearish trend is you will see the market breaking lows and rejecting highs, while in a bullish trend you see the market rejecting lows and breaking highs. And you can see it rejected at this low and it broke this high. So as far as the market has retraced back to this point, what I'm willing to see is the market to perhaps get to this other block or continue going down from this point here, continue selling from this point here. But I would love to see the market come up to this other block here, this particular other block here, and start selling. So that's it, guys. So with this we've come to the end of this session. Until next week again, we'll have another forecast class. So I hope this will give you something during the week. I wish you a happy week and happy trading.